And welcome back to the YouTube channel. So today I'm going to be talking about a trade I took on the S&P 500. I don't usually trade the S&P. I'm usually more of a Euro US dollar and GBP US dollar, along with the DXY and stuff. But I thought I'd try something new. I'm going to start trading the S&P 500 along with the Nasdaq and the Dow Jones as well. Just thought I'd switch it up a bit, and then hopefully I'll be able to make some more content as well and have more trades to post. So without further ado, this was a trade I took on, I believe it was Thursday, on the S&P 500. So starting from the weekly, I was kind of anticipating a bullish close week. This is the week we've just been in, so I'm recording this on Sunday, by the way. So this is last week's weekly candle. I was anticipating a bullish close weekly candle to maybe sweep these two previous week's highs, which are also relatively equal as well, and maybe even sweep this previous week's high as well. So that was kind of my draw on liquidity for the week, even though it did not get met. So I was looking for buys. So going back onto the daily, I believe it was Thursday. This was the day. So you can see here again, I was anticipating that to close bullish, have a daily close bullish candle, especially after sweeping this previous day's lows here and this previous day's low here, these two here. However, again, we didn't get that, and that's kind of why I always TP at the next opposing array, and I don't just shoot for the stars, because it's trading, anything can kind of happen. So going on to the 15-minute. Okay, so this was the day that I took the trade. In fact, I'll bar replay this so it's less confusing. Okay, so this is Thursday. So as you can see now, when I trade the S&P 500, unlike with Euro US dollar and GBP USD, where I have a few entry models, that being the London Judas, London to NYOTE, and market maker buy and sell models. For the S&P 500, I just trade market maker buy and sell models. I don't entertain any setups during London on the S&P 500. I think it's definitely more favorable in New York to trade. You got the sort of NYAM and NYPM, and I always hunt for that market maker buy and sell model. I like to see like London accumulate, and then that's the accumulation phase, and then maybe sort of trade lower, and then you get that smart money reversal, maybe in like New York AM, and then you've got the rest of the New York session to then continue that move. So as you can see here, we've had this kind of accumulation there, and it's also, this here is trendline liquidity. Okay, so that was kind of my draw on liquidity, and then this is the previous day's low. You see that got swept here. I'll just mark that previous day's low, yeah, and then another one here as well. So when you trade the market maker buy and sell model, you always want to hunt for that smart money reversal. So that's here. I know a lot of people call it the market short shift, which to be fair I do, but when it's in context with the market maker buy and sell model, it is a smart money reversal. Some people call it chalk, BMS, BOS, but I like to stick to market short shift and the smart money reversal if it's in context with the market maker buy and sell model. So we've had our smart money reversal in a logical area. You want it to sweep some form of liquidity, preferably like previous day's lows, previous day's highs, previous week's lows, previous week's highs, as that is kind of in this case it would be the offset accumulation to go higher. So it would be the pairing of smart money longs with retail buys who will be looking to buy who would be looking to sell, on the break of these previous days lows, as they believe in strength and weakness. They think that once price has broken past the previous day's low, in this example, that it will continue the move, and obviously smart money will pair there, in this case again, long positions with those retail shorts as like a kind of like a counterparty. I also like to hunt for the smart money reversal excuse me, in an array. So we had, for my choice of array, we had this kind of, believe it or not, this is an order block. It's quite a juicy order block. However, it's an order block nonetheless. So you can see here it's traded into that, and it's a 1 hour order block because it's the last down close candle before bullish displacement that leaves the fair value gaps, which is what confirms the displacement, which is kind of what confirms the whole that to be an order block. So we had that. So it was a perfectly logical place for a smart money reversal. Sweep of liquidity being 2 previous days lows, which is the offset accumulation for the smart money reversal, also made within a 1 hour order block. And my entry was, we had this order block here. Okay, and my entry was just here. Okay, now I tried to get the before and afters, but I actually took this one whilst I was at the gym. It was a bit of a kind of in the heat of the moment one. I was actually walking to the gym and I seen it on my phone, and I thought it was quite a textbook setup. I targeted I had my stop loss here just below this low here. Okay, and my target was the opening of this order block. You can see here these 3 up close candles before bearish displacement. That's an order block. I could have gone, maybe a bit higher, so liquidity above this high or this high, but I always like to just shoot for the next opposing array. I just target somewhere where price is like 100% guaranteed going to hit. We've also got this, you could add that, that's a mitigation block. Wherever there's a mitigation block, there's always an order block. So price obviously taps into my limit in respect to this order block quite a few times actually. You can see here as well, this is also an order block. This got respected. So this is kind of, when you see bullish price arrays, in this case bullish order blocks being respected, it's a sign that the algorithm is seeking buy side liquidity. It's something you want to look out for. Another thing to note as well, we also had on the Nasdaq a SMT divergence here. I'll remove Friday's price action as well, so I don't confuse anyone. So this was the Nasdaq. So you can see here we had that accumulation, and you see here obviously we had this smart money reversal where we had the S&P created a lower low and then another lower low, but then the Nasdaq created, we had this sort of swing low here and then created like a lower high. So that is a SMT divergence. It shows that the in this case the Nasdaq would have been more favorable to trade as it was weaker. And you can see here as well, if you compare the move, if I remove this, you can see this move here would have been this move here, and this is a lot more explosive. It's because it's weaker. So ideally this one would have actually been more favorable to trade, but however, I didn't get an entry on this one. We tapped into this fair value gap. I don't even think it came to the consequent encroachment of this 15-minute fair value gap, no. So I wouldn't have got an entry on that. So I decided to take the entry on the S&P 500. I was actually anticipating a rally up, maybe to sweep the liquidity above this previous day's high, and then into as we mentioned at the start of the video, sweep the sort of like liquidity above these relatively equal previous week's highs, as that was my narrative. But it just goes to show you why it's always important to just TP at the next opposing array. I could have just tried to it's going to go for there, but obviously it would have got not even halfway towards my TP, and then it's reversed. So you always have to be content with what the market gives you. I just always TP at an exposing array, somewhere where I know price is definitely going to hit. If you are looking to trade the S&P 500, I'm fairly new to it myself. Always just hunt for that market maker buy and sell model. You can see here, look, we've had this as well, QM model, chalk, smart money reversal, market instruction shift, it's all the same thing. And you've got the same thing here, look. Let's say smart money reversal. Where's my smart money? Yeah, there. And you could have had, this is the consolidation, and then you've got, this is the sell side of the curve, and then obviously that's your buy side of the curve, because again with this is a market maker buy model. And you've got the same thing here, initial consolidation, and then you've got here as well, sell side of the curve, and then look, smart money reversal again. I know this one probably not, the smart money reversal didn't occur in as much as a logical area, as there was no sweeps on liquidity. I think the only thing you had going for this was this order block, but I mean still valid. Probably would have half the risk on it. I always like to see the smart money reversal sweep some form of liquidity. Doesn't necessarily have to be a previous day's low, previous days high, weeks low, weeks high, just some form of liquidity anyway. Again, you've got this one here, that's market short shift. This would have come to OTA into this order block or breaker block. So it is kind of, the name of the game for trading S&P 500 is, and I think any indices, well, Nasdaq 100 and the Dow Jones as well, is market maker buy and sell model. So I hope you learned something, and I'll see you.